Okay, this is timing strategies for Monday, July the 14th. Client blog update. Again, this is for clients' purposes of communication. If you're a member of the public, you're not a client, you happen upon here, please feel free to give us a call or an email. This is not a recommendation to buy or sell or take any investment in any security whatsoever. I got to do that. Anyway, so back to where we were. Looking at the spiders, SPY for the S&P. You know, everybody, even including myself, I'm guilty in this crowd, so I'm human. That's the first admission of life, is you're human. That I'm looking for a bounce. I've been looking for a bounce for the last week. We're not getting the bounce. Everybody else is talking about the bounce, the bounce, the bounce, the bounce. My God, the bounce has been bouncing around for so many damn days, and it's basically been bouncing lower is really where the bounce is heading. And again, like I commented earlier, too many cooks are spoiling the soup on the bounce theory, and I'm guilty of that right there too. So what are we doing? Well, I'm not selling into the hole here. What I'd like to see is the bounce. And here's the spiders as of today's close. You know, we were looking to get long 120% at B2. That was our yearly buy point. Very strong, aggressive, but based on price action, we're not doing it. That's for darn sure. Now, actually, we're looking for the sell point. And something somebody told me a long time ago was when the market was coming back down in 2001, and I got long and I got stopped out, and then it ran back up without me after I got stopped out, basically right at the lows, barely, slightly below my entry point. Big heavy trader, lives in my neighborhood, a friend of mine. I told him, you know, I'm looking to buy it when it comes back down. He told me, you don't want it if it comes back down. Well, more and more in every market swing that I experience, and I learned how that statement is so much more key, is that if we get the balance that we're looking for, and using the S&P or the spiders, if we can trade back up into that level, we may not want to short it at that point. Now, I know that sounds ridiculous and contrary to what we've been saying, but we've been down for so long that, yeah, can we go lower? Absolutely. Am I planning, and do I think it's going to go lower? Absolutely. Oh, I think we're going to see, ultimately, you know, we're going to take out the lows of 2002. You know, and just to give you an idea of what that looks like, here we are. Let's go to a monthly. You know, 2002, that's at the 85 level, 850. I have every belief that we're going to take out this level, hopefully not before we get a bounce. But, you know, the 2004 lows, I mean, we're there. I mean, the 2006 lows where Hank, the lovely Treasury Secretary that we got, comes in, came to power. You know, the 2004 lows, I mean, I have no doubt that we're going to take those out. It's just a matter of, you know, where are we going to head before that ultimately happens. So looking for that short that, you know, we've been waiting to lay into and reload. I want to put something else into perspective here. Here's the daily chart. We're still long 30% in the S&P, Dow, NASDAQ, Russell, basically the indices, and the financials using the XLF as a proxy for the financials, although the RIDEX funds are not correlated to that exactly as that is. So what a disaster the financials have been, and we were looking to do a buy also at the 1850 level, which almost was perfect yesterday until another day opened up and perfect sell price. So we're long 30% on the indices using the Dow, S&P, and so forth, along with the financials as an overweighting element of that index, but we're also long the precious metals fund, and we'll go back to the GDX for that. RIDEX Precious Metals is basically working very nice, very nice. For that long portion, which is 15%, we just upped that up to 20% today, has effectively dampened the drawdown in our long positions in the market by next to nothing. I mean, our drawdowns we actually have been positive. We've made like 0.25% or 0.5% or something like that, just with that simple lower position size in the precious metals. It's actually done very well. Now, here's the GDX. My estimation was that gold was actually outperforming up until I opened my mouth using the GLD. Now the GLD is kind of underperforming, but on a trending basis, the GLD is dramatically stronger on a trend swing basis than the XLF. I mean, than the GDX. So as long as we're above that level, or as long as we're above this level, I mean, even that level, and this is kind of like just a noise level right in here, the highs that we broke out of Friday and today. These three levels are critical. I do not want to see that thing come back down now to that below the 90 level on the GDX. But if we look at the XAU, which is a old indice for this sort of stuff, but it works real beautiful. And sometimes you still want to watch the old birds. That is just looking fine, because we are breaking above and closing above this major level at the 195 level, for the most part, 195. Held that, closed above it today. Is that distribution? I don't know. If we come back down below this level on the XAU, that'll be a little bit suspicious. I don't like to see something break like that with that kind of compression and then just fail at the break. So, bottom line, I'm still looking to get long. I mean, I'm still holding the long position in the basket of the indices, looking for that bounce. If we can get what had the probability today, I mean, they couldn't do it today. This is a really sick market. And again, once everybody throws out all their remaining hope, and that kind of comes to me, that the market can't get it going, that's usually when it gets it going. But the problem is, again, is that we've drifted around in this range for so long that the next break, any lower, if we gap lower tomorrow, the next price target I have is about 1171. I'm just going to map that out right now. Right at about 1170, 71, I'll call it 70 quarter. Worst case scenario, and I'm not going to keep buying this garbage on the way down, but the next level that we can probably think about being a buyer at is about 117 on the spiders, or about 1175 on the S&P cash. That's a long way to go. It's another 5%, give or take. And if we get that all in one day, like tomorrow, not over the next one day over the next week, if we can get a knockoff of another 4% down to about that 1170, 117, 25 level on the spiders, then we'll add to our long positions. But then at that point, it just becomes a matter of when that bounce comes in. If it does break below and jumps down to that level, at that point it becomes, all right, coming back up to the B2 level, more than likely we're looking to get short from that level. So this is a day-to-day thing. It keeps switching. And the last point I want to make is, it's really not quite as bad as it seems at the end of the day, because if you look at the spiders on an intraday basis, we've basically chopped. This is a 45-minute time scale. We've basically chopped for the first part of this, I mean almost the month of July, between the lows that we put in right after the Fed meeting and today's low and closing price, which for the most part on a daily range basis is really not as ugly as it feels, that's for sure. I mean, it feels a lot worse, but it's really not as bad on a trend basis as it may seem over the last week, 2 weeks, of about 2%. If we can get back above that 1260 level, and certainly back above the 1280 level on the S&P cash or the spiders 126 or 128, then we'll change our thoughts. But for now, we're just kind of marking time and seeing which way it's going to go, so we can kind of go the other way. Is really, in a nutshell, where it comes down to. Again, which way it goes after this congestion break, we're looking to either add more back down here, as long as it doesn't drift lower. We may just go flat on that position if we drift lower tomorrow or the next day. If we get a nice big wash tomorrow, then we may add. If we can get a bounce back up, then we'll probably dump the short and think about dump the long and think about getting short. Long term though, the gold, GDX, that's a keeper. We ain't letting that one out. So give us a call if you have any questions. I wish I was more help, but as things develop a little better, we'll have a little more clarity and statements of those along the line. All right, enjoy your night.